Welcome to another episode of the Watchtower Report, where strategy meets reality. Today, we are going to dive deep into a revolutionary shift that's coming to the world of global finance. We'll explore tokenization, the process of digitizing ownership of both physical and digital assets, and its massive potential to reshape economies, reduce national debt, and create wealth in new ways. As global economies face rising debt levels and increasing inequality, blockchain technologies and cryptocurrency are quickly evolving into tools that could transform the way we invest, trade, and even restructure national financial systems. Let's break down how tokenization is positioned to change the game and why AI will play an essential role in managing these changes. The rise of tokenization. The rise of cryptocurrencies like Bitcoin, Ethereum, and other blockchain-powered systems has opened up new possibilities. Originally, cryptocurrency was seen as an alternative to fiat money, an opportunity to take financial power away from centralized banks. However, tokenization is where things start to get truly transformative. Tokenization refers to the process of creating digital tokens that represent ownership of real-world assets, from real estate and art to natural resources and even intellectual property. With tokenization, it's possible to fractionalize ownership of high-value assets, meaning you can own just a fraction of an asset, not the whole thing. For example, instead of needing hundreds of thousands of dollars to purchase a property, you could buy fractional shares of that property through tokenized ownership. This is where blockchain shines. It's not just about the money, it's about giving access to markets that were once out of reach for most people. Tokenizing sovereign debt. One of the most interesting applications of tokenization is in sovereign debt. As many countries around the world face unsustainable debt levels, tokenization could offer a solution that not only alleviates some of the pressure, but provides a way for governments to raise capital without depending on traditional loans or increasing taxes. Governments could tokenize their sovereign bonds, essentially creating digital government bonds backed by national assets like land, infrastructure, or natural resources. These bonds could then be sold globally to investors, giving the government immediate access to funds while offering tokenized ownership of a future return on national resources. Take Canada, for example. Canada is rich in natural resources like oil, gold, and timber. If Canada decided to tokenize its resources, it could sell fractional ownership of its mineral rights, forest reserves, or future tax revenues. Investors from around the world could buy into these tokens, raising capital that could be used to pay down debt and fund public infrastructure without the need for loans from foreign entities. This process creates a win-win. Global investors gain access to new assets, while the government raises funds for economic growth and debt management. Tokenization for national infrastructure projects. But tokenization isn't just about paying off national debt. It could also be a tool for driving economic development. For instance, infrastructure projects like public transportation, smart cities, and energy networks often require vast amounts of funding. Governments are typically reluctant to spend taxpayer money on these projects, but tokenization could solve that problem by raising capital up front. For example, a government could issue tokens that represent future toll revenues from highways, bridges, or even electricity grids. By offering these tokens to investors, the government could secure funding for the construction of these projects, while investors benefit from the long-term revenue generated by them. This could open up private-public partnerships on an unprecedented scale, enabling faster development of cities and infrastructure projects while reducing the need for traditional financing methods that often carry high interest rates. A faster, more secure global financial system. Now let's talk about efficiency. Traditional finance is bogged down by intermediaries, banks, brokers, clearinghouses, and other third parties, all of which introduce delays and fees that hinder the flow of money in global markets. In stark contrast, blockchain technology offers speed, transparency, and security. With tokenized assets, cross-border payments can happen in real time. Using cryptocurrencies like Bitcoin and Ethereum, as well as stablecoins and CBDCs, central bank digital currencies, nations can settle transactions within seconds rather than days. This will increase liquidity, reduce costs, and ultimately make the global financial system more agile. For example, cross-border remittances, which are often bogged down by fees and delays, could be completed almost instantly using tokenized currencies. Blockchain-based systems can also allow for instant settlement of international trades, creating a new era of global commerce where financial transactions are transparent and efficient. AI's role in tokenization. But there's another major piece of this puzzle: artificial intelligence, AI. AI will play a crucial role in the management of tokenized assets. Imagine the possibilities when AI works alongside blockchain to optimize investments, predict market trends, and manage portfolios of tokenized assets. Governments could use AI to track the performance of their tokenized bonds or resource-backed tokens, allowing them to adjust economic policies in real time based on global market conditions. Similarly, AI could be used to optimize resource allocation for public infrastructure projects, ensuring that tokenized funds are used most efficiently. AI can also analyze data from tokenized markets to forecast trends and price fluctuations in real time. This would create a new class of financial tools, powered by AI-driven insights and accessible via decentralized platforms, making financial markets both more accessible and data-driven. Tokenization as a global wealth generator. What we're looking at here is not just a way to manage debt or raise capital. This is a potential global wealth generator. By embracing tokenization, governments can unlock new assets and create new forms of value in ways that were never before possible. Take Africa as a case study. Africa has abundant natural resources, but it has struggled for decades with underdeveloped infrastructure and access to capital. With tokenization, African nations could tokenize land or agricultural production, offering fractional ownership to global investors. This would provide massive liquidity and enable African countries to build infrastructure, modernize economies, and create new industries. Through tokenized investments, African farmers could raise funds for their operations, and the proceeds could be used to increase food production, supply chains, and economic stability, transforming not only local communities but entire economies. The same model could be applied to other regions of the world, where emerging markets could raise the funds they need to leapfrog traditional development models and move directly into a digital economy, funded and supported by global investors. Tokenization and the future of financial equality. Beyond just paying off debts and funding infrastructure, tokenization holds the power to democratize financial access for every person on the planet. Historically, global financial markets have been largely exclusive, with most individuals unable to access the tools necessary to create generational wealth. With tokenized assets, low-income individuals can now own pieces of high-value real estate, luxury goods, or companies, participating in the financial markets that were once out of reach. In fact, tokenization could lead to financial equality, where wealth is more distributed globally. We could also see greater access to retirement funds, as tokenization could allow for the creation of global investment portfolios that include a diverse range of tokenized assets. These portfolios could help individuals from all walks of life to secure their financial futures without relying solely on traditional savings methods or employer-managed pensions. The future of tokenization and AI in global finance. So where does all of this leave us? The future of global finance will likely see tokenization at its core. By unlocking the value of national resources, sovereign debt, and public assets, countries can raise capital efficiently and take control of their economic destinies. AI, working alongside blockchain technology, will manage these assets, forecast trends, and optimize investment strategies in real time. Tokenization opens up opportunities for global wealth creation in a way that empowers individuals, governments, and businesses alike. And while there are certainly risks and challenges, such as regulation and cybersecurity, the potential for tokenization to revolutionize global finance is undeniable. The question now is not whether tokenization will shape the future of global finance, it's how fast we will see it happen. The future is now, and it's digitally tokenized. Thank you for tuning in to another episode of the Watchtower Report. Stay informed, stay strategic, and until next time, keep your eyes on the horizon.